Hello, my name is Mayanka. I am accounts and a finance trainer from Uplatz. Today in this class we will discuss part 4 of computation of total income and tax payable. Part 1, part 2 and part 3 are already covered by us in our previous videos in which we have discussed some steps which are required to be taken to calculate the amount of total income. In our previous class, first we have discussed about the income which will be taxable under the heads. Means for the purpose of computation, first we will determine the residential status of the assessee. Then we will classify the income. Then we will classify the income in the respective heads. And then we will apply the provision of such respective head. Then after we will provide deductions. Then after we will provide the deductions deduction under section 10 under chapter 6a, and then after we will calculate net total income of the assessee. Then after we will apply the rates of income tax which are prescribed by the finance act, and after the calculation of tax we will apply the provision of surcharge. So after surcharging, we will determine, or we will, on the basis of after surcharge, we can find the value which is required to be payable by the assessee. After calculating surcharge, the next step is health and education cess on the income tax. Means for the example, there is a assessee Mr. Ram, and whose total amount of tax for the example it is 35,000 rupees. This is the amount of tax on the income. Now we will add education cess and secondary higher education cess, health and education cess. And the rate of health and education cess is 4%. Means the education cess will be 1,400 rupees on such 35,000 rupees. The amount of the education cess is 1,400 rupees. So health and education cess on the income tax. The income tax is to be increased by the health and education cess. Means the amount of income tax will be increased by health and education cess. Means the total will be 36,400 rupees. The total will be 36,400 rupees. This is the total tax payable. And the rate of surcharge, the rate of education cess is 3%. The rate of education cess, the health and education cess is 4%, and it will be calculated on the amount of income tax. Means income tax plus surcharge less rebate under section 87A. Under section 87A means the net amount of tax, means the total amount of income tax. It will be applicable, or it will be calculated on the total amount of tax. So this cess is payable by all assessee who are liable to make the payment of tax. Means such amount of cess, the cess is required to be payable by each and every assessee. It is required to be payable by each and every assessee. The assessee who are required to, or who are liable to make the payment of tax. Means Mr. Ram, he is required to make the payment of tax 35,000 rupees. He is required to make the payment of tax 35,000 rupees. So it is mandatory to him that he will pay health and education cess also. If the tax rate means if the income tax is 0, then no need to make the payment of such a health and education cess, because the health and education cess is calculated on the amount of tax. When the tax is 0, then there will not be health and education cess. So the cess, health and education cess, is required to be payable by each and every assessee. It is required to be payable by each and every assessee who is liable to make the payment of income tax, income tax, irrespective of their total income, irrespective of the income. So total tax liability of the individual is equal to total tax liability of the individual is equal to tax on total income tax on total income, tax on total income of the assessee plus surcharge. Means that total tax liability will be total tax liability. It will be total tax liability will be number one, amount of income tax plus add amount of income tax add surcharge add and less rebate under section 87A, under section 87A, and then add health and education. Health and education says. So the total will be, for the example, the taxes. For the example, that income taxes 25,500. Add surcharge. Add surcharge. For the only for the purpose of example. Only for the purpose of example, it is 1,250 rupees. Rebate. For the example, it is 2,500. It is 2,500. And then health and education says will be is equal to this is equal to, or say we can say is equal to sum into 4%. So 99, sorry, 970 rupees. 970 rupees is the amount of health and education cess. Means if for the example the amount of income tax, we take some higher amounts, just like if the amount of tax is 1 lakh 10 lakh 50,000 and the surcharge on such amount, for the example it is 1 lakh 50,000, then the rebate as per the provision, the rebate will be zero. The rebate will be zero. So the health and education cess will be is equal to this into 4%, into 4%. So the total amount, so the total or net tax payable will be 12,48,000 rupees. 12,48,000 means total tax liability of the individual will be tax on income tax. Tax on income tax which is payable. Tax on income tax which is payable by the assessee plus surcharge. Plus surcharge if applicable, means if the income is more than 50 lakh rupees. If the income is more than 50 lakh rupees, and we will reduce rebate under section 87A if any. And the rebate is available only when if the amount of total income of the assessee is up to 5 lakh rupees, up to 5 lakh rupees, and then we will add health and education cess. Health and education cess is 4%. Is 4%. So on the basis of this, we will calculate the amount of total tax liability of the assessee. On the basis of this, we will calculate the total taxable liability of the assessee. Total tax liability of the assessee. Next is alternative minimum tax, AMT, alternative minimum tax, step number 12. Step number 12. So as per the provision of Income Tax Act, there are some profit linked deductions and investment linked deduction. Means as per the Income Tax Act, there are some deductions are available to some particular industries and infrastructure facilities. And these deductions are profit linked deduction and the investment linked deduction. Means if there is any assessee invest in such particular in the particular field or in the particular investment, then such person shall be eligible to take the deduction. So means as per the Income Tax Act, there are some deduction which are relating to the profit link, which are relating to the investment link. Taxpayer who are eligible, the person who are eligible to claim such deduction and pay no income tax means the assessee who are eligible for such deduction, the persons who are eligible for such deduction, they are not required to make the payment of income tax because his income will be his income will be exempted means the deduction is available. So the income will be zero for the purpose of taxation means the taxpayer who are eligible to claim such deductions, who are eligible to claim such deduction, they are not required to make the payment of income tax or the marginal income tax through they are capable to pay higher tax. So for the purpose of this, it has to be kept in mind that our government also need regular and consistent inflow of tax, which is one of the major source of income or major source of revenue. In the case of government, the tax is one of the important source of revenue. One of the important source of the revenue because the tax is used by the government for the welfare of public. So for the purpose of this, if there is any if there is any company which is investing in such investment, then the tax will be zero. So how the government will manage? So for the purpose of this, the government has introduced the concept of alternative minimum tax. AMT, the concept of AMT is introduced by the government under the Income Tax Act, so that if the assessee is not required to make the payment of tax on the basis of such profit link deduction or on the basis of investment link deduction, so on the basis of AMT we will calculate the amount which will be taxable, and on such amount the assessee will require to make the payment of tax. So for the purpose of this, the provision of AMT, alternative minimum tax, is introduced by the government in the Income Tax Act. In the Income Tax Act, Chapter 12BA contain the special provision. Chapter 12BA. Chapter 12BA contain the special provision for laying of alternative minimum tax in the case of person other than company. Means the provision of AMT, the provision of alternative minimum tax is applicable. It is applicable in the case of person. It is applicable in the case of person other than company. Means it is not applicable on companies. In the case of company, the provision of MAT, minimum alternative tax, is applicable, but other than company, the provision of AMT will be applicable. Any other person, other than company who has claimed deduction under this section include in chapter 6A under the heading C, deduction in the respect of certain income, deduction under section 10 double or investment in deduction under section 35 AB would be subject to AMT. Means the assessee who are claiming the deduction under chapter 6A heading C means deduction which are related to the certain income, just like 80 80 in this case, the assessee is eligible to take a reduction in the respect of royalty income. If there is any assessee who is engaged in the means such assessee is earning the royalty income only, then his total income will be exempted, means his total income will be deductible, so no need to make the payment of tax. So for the purpose of this, the assessee who are claiming the deduction under chapter 6A heading C, deduction in the respect of certain income, or under section 10 subsection under section 10 AA, or investment linked deduction under section 35 AD, then for that in this situation the provision of AMT will be applicable. The provision of AMT, alternative minimum tax, will be applicable. The provisions of AMT would, however, not be applicable to the individual, HUL, AOP, BOI, whether incorporated or not. The provision of AMT would, however, be applicable, however, not be applicable to the individual, AOP, BOI, and any artificial judicial person if the adjusted total income of the assessee does not exceed 20 lakh. Means the provision of AMT not be applicable to the individual if the amount of the total income of the assessee, if the amount of total income of such individual, AOP and BOI, is not more than 20 lakh. If it is more than 20 lakh, then the provision of AMT will be applicable. Then the provision of AMT will be applicable. it will be applicable. Further, the provision of AMT would also not apply in the case of individual HUF who opting the concessional rate of tax. Means if there is any assessee who opting the provision of or who is paying the tax at the concessional rate of income tax, means as per section 115 BAC. That's like 115 BAC means there are the concessional rate of income tax. Normally the rate of income tax is 0 to 2.5 lakh, it is nil. 2.5 lakh to 5 lakh, it is 5%. More than 5 lakh to 10 lakh, it is 20%, and more than 10 lakh, it is 30%. But as per the concessional rate of income tax, the rate will be different. Means just like 0 to 2.5, it is 0. 2.5 to 5 lakh, 2.5 lakh to 5 lakh, it is 5%. 5 lakh to 7.5 lakh, it is 10%. 7.5 lakh to, sorry, 0 to 0 to 2.5, 0, 2.5 to 5 lakh, it will be 5%. 5 lakh to 7.5, it is 10 lakh. More than 7.5 but up to 10 lakh, it is 15%. Means there are the concessional rate of taxes, concessional rate of taxes under section 115 BAC, under section 115 BAC. So the person who is applying the provision of, who is opting the concessional rate of income tax, then the provision of AMT will not be applicable on such assessee. It will not be applicable on such assessee. Note, there is a note that at intermediate level, since profit link deduction provided under section 80IA to 80IE. At intermediate level means at the means in the case of profit link deduction, there are some profit link deduction just like section 80IA to 80IE, 80GJA, 80LA, 80M, 80P, 80PA. Means these are the deduction, means these are the profit link deduction, these are the profit link deductions, or these are the investment link deduction, just like 80 RRB, 80 QQB, 80 JJA. These all are the deduction which are given under chapter 6A under the heading C, under the heading C. So accordingly, where the regular income tax which is paid by the assessee and it is computed as per the provision of Income Tax Act, then means for the calculation, means where the regular income tax payable by the assessee, payable by the individual for the previous year, then it will be calculated as per the provision of income tax is less than AMT. If the amount of income tax is less than the amount of AMT, then the adjusted total income shall be deemed to be the total income of the assessee, and such person shall be liable to make the payment of tax on such adjusted total income at the rate 8.5%. Means where the regular income tax payable by the assessee in the previous year, which is computed as per the provision of income tax, is less than the AMT payable. Means for the example, the adjusted total income, adjusted total income, adjusted total income of the assessee, for the example, it is 7,50,000. The tax is 18.5%. The AMT rate is 18.5%. So the tax will be 1,38,750. And this is the AMT. And the tax as per income tax, the tax as per income tax, for the example, 1,20,000. Then such AMT will be considered the income. Means if the amount income tax payable by the individual for the previous year computed as per the provision of Income Tax Act 1961 is less than the AMT, if it is less than the AMT, then the adjusted total income, means such adjusted total income 7,50,000 will be considered the total income of the assessee, and such person shall be liable to make the payment of tax at the rate 18%. 18.5% at the rate 18.5% under section 8, under section 115 GC. Means the amount of income which is required to be payable by the assessee, the amount of tax which is required to be payable by the assessee is 1,38,750 rupees. 1 38,750 rupees is the amount which is required to be payable by the assessee to government as a income tax, as a tax. Adjusted total income. What is the meaning of adjusted total income? The adjusted total income means the total income before giving the effect of chapter 12 BA. Means the adjusted total income means the total income which will be increased by the total income of the assessee, the total income of the assessee which will be increased by number one, any deduction which is claimed under section 10AA. Means if the total amount, for the example, the total amount of income, total income of the assessee 7,50,000. Okay, it is 7,50,000 is the total amount of income of the assessee. Now he has taken the deduction under section 10AA. Means there are some deduction which is availed by him under section 10AA. Then it will be add deduction under section 10AA, under section 10AA. For the example, 25,000. Or the reduction claim under section 35AD. If there is no deduction which is claimed by the assessee under section 35AD, as reduced by the depreciation which allow under section 32. If no depreciation under section 35AD as allowed in the respect of asset for which said deduction is claimed. If no deduction under section 35AD was allowed in the respect of assets for which such deduction is claimed, and we will also add deduction which is claimed by the assessee under chapter 6A under heading C, means deduction in the respect of specific income. Deduction in the respect of specific income means if there is any deduction which is claimed by the assessee under section 80, deduction under section 80 JJA, for the example 75,000, then it will also be deducted. So the adjusted total income will be 8,50,000. Adjusted total income will be 8,50,000, and the tax will be 18.5%. Is equal to this into this. So 1,57,000 is the amount of AMT. Tax credited for AMT. Tax credited for the AMT. What will be the amount of tax credited? Tax credited for the AMT. So the tax credited in excess of AMT paid over the regular amount. Means the tax credited is the excess of AMT over the regular income tax. Means under the provision of Income Tax Act, means as per this provision the excess amount will be 1,38,750 minus 1,20,000. Excess amount will be 18,750. 18,750 is the amount of 18,750 is the amount. It is the amount of excess. It is the amount of excess of AMT. Excess means the tax credit tax credit is available in the respect of such amount. So adjusted total income, if the amount of the tax is payable by the assessee and the tax is paid by the assessee on the basis of AMT. So the AMT is required to be paid when the total income tax of the assessee is less than the AMT. Then the adjusted total income will be considered the income of the assessee, and the tax rate will be 18.5% and tax pay. And in this situation the adjusted total income tax means AMT will be high, so the excess amount will be eligible for the tax credit. It will be eligible for the tax credit. Means 18,750 rupees is eligible for the tax credit. So such tax credit shall be carried forward and set off against the income tax which is payable in the later year. Means in the later year we can set off, we can adjust such amount of profit, we can adjust such amount of excess amount. Means such excess AMT or the excess tax we can adjust. We can adjust with the regular amount of tax, which is regular amount of tax. So the balance tax credit, if any, shall be carried forward for the next year. Means if there is any amount of credit in AM, means if there is any AMT credit, then we can set off it with the current year tax, or if there is any balance, then we can carry forward it for the next year and set off in that year in the similar manner. And we can set off. AMT credit can be carried forward or set off for the maximum, means up to the maximum period of 12 to 15 months, 15 assessment year. The maximum period for which we can carry forward and set of the AMT. It is 15 assessment year. Means till 15 assessment year, we can carry forward and set off the amount of AMT, the amount of credit of AMT, the credit of AMT for the period of maximum 15 assessment year. Tax credit allowable even if adjusted total income does not exceed 20 lakh rupees in the year of setup. Means as per the provision of AMT, the provision of the AMT will be applicable when the total income of the assessee, when the total income of the individual and the HUF is more than 20 lakh rupees. It is more than 20 lakh rupees, but such condition is not available in the case of set off. Means in the case of set off the adjusted total income credit, and at that year your amount of income is not more than 20 lakh, then you also eligible to take the credit. You also eligible to take the credit. In case where the assessee has not claimed any reduction under Chapter 10 or Section 35 AD or deduction under Section 80 JJA under section 80 JJAA or under section 80 QQB or 80 RRB in any of the previous year. If there is an SSC, he has not claimed any reduction. He has not claimed any reduction under section 10AA or section 35 AD or deduction under section 80 JJAA or deduction under section 80 QQB, 80 QQB or deduction under section 80 RRB in the respect of royalty in the previous year, and the adjusted total income of the assessee and the adjusted total income of the assessee is not more than 20 lakh. It is not more than 20 lakh. So in this situation, the assessee is still eligible. He is still entitled to set off the amount, the set off his brought forward AMT. He can set off with the amount of regular income tax. Means if the amount carry forward AMT balance is 2,500 and his tax liability, current year tax liability is 10,000, then he will pay only 7,500 rupees. 7,500 rupees. So the provision of Income Tax Act 1961 relating to the advance tax and interest under section 234A, 234B and 234C shall be applied to the assessee who is paying the tax by the way of AMT. Means the assessee who is paying the tax, who is paying the income tax, who is paying the income tax. Then the provision means the person who is paying the amount of income tax as per AMT provision. As per the AMT provision, then the provision of advance tax and the provision of interest under section 234A, 234B and 234C will also be applicable on it, applicable on such assessee. So on the basis of this, we have understand or we have covered part 4 of the computation of total income and tax payment. There is also another part in which we will complete our such concept. Means we will complete the one of the important part or important chapter of income tax, computation of total income and tax payable. So this is part 4 of such topic. Part 5 is already is there, and we will discuss in our next class. So kindly consider part 5 also, so that you can understand full concept of such a topic. Thank you so much. Bye bye and have a nice day.